motherfucker?
All right, what's up? Sunday for me anyway. June 28th. All right, 2026. What's up, Master Kim? What's up? Ugg was here like 30 minutes ago. Yeah, I wanted to do two streams today, but man, I got caught up on the panels with Ruby and Kinetic Kel and all that whole 24-hour stream they had. So I went out there in the morning, so that wasted time. That could have been used to do this stream here, and then I could do another stream later. But all right, fine. We got to do what we got to do. Okay, we got to do what we got to do. Oh man, let's see. First up, let me hurry up this up here. Let's talk about the cycles that we see right now. Okay, let me update you on what I see. So let's go through this live. All right, I didn't prepare nothing. Okay, so let's see what we got here. All right. Here is gold and silver miners index Philadelphia XAU. So this was the top here, right? So last top was over here. Let me see what cycles we had then, right? So we have a 353-day cycle for this one, okay? And this is going to be somewhere around September based on what was the projected cycle here. This is the strongest cycle so far. Um, the problem with the gold is that it fluctuates. There's no stable cycle that I can see from the past. So I'm gonna go based off of this long-term cycle. This is the major one, but there are minor ones like this 90 cycle that you will see later on. So if I take away this 353, okay, and just do the shorter cycle, you see like it kind of gets these minor tops here, minor top here. Okay, so it went sideways after this. And the problem was that it did project a high, another move up in June, but we didn't get that. If we go look at Bitcoin, I can see like there was also another cycle claiming that we would get some kind of high in June. We didn't get that. We didn't get any of those things, right? So that's bad. It's bad in the sense that like the next time this is going down, it's going to be very severe. All right, probably. It's not going to take much for gold, silver, Bitcoin to just crash because it looks like everybody just ran into semiconductors. Like if we look at the flow. So yesterday, if you watch yesterday's show, at the beginning, I showed that all the retail buyers, they were running into semiconductor stocks. They were just chasing it, right? It keeps going up and up and up. And then you see on the converse side, Bitcoin, gold, and silver going down. Okay, so now you could assume like maybe people were cashing out to buy more semiconductor stocks like Micron and whatever. I don't know. The other thing too is that if you look at the Chinese currency and something's happening over there. Like the Chinese did ban foreigners. Not foreigners, like their citizens from buying foreign stocks. Okay, some weeks ago, right? And the Korean stock market has had a hard time going up since then. Um, and the Chinese were the biggest buyers of gold. I think they still are the biggest buyers of gold right now. We also discussed there was some weird stuff with Japan and gold because people were using the Japanese gold market to smuggle in gold and for resale elsewhere. And then there was another story about a ex-CIA agent stealing gold. So, there's something going on. There's something really sketchy going on overall. But I think the dominant force is because of the currency pairs, right? So gold and silver are very sensitive to currencies, all right? Right now, especially. They're always going to be like sensitive currencies, but they're really sensitive currencies and also sensitive to bonds. We're in a weird state too with the Japanese interest actually the highest in what 30 plus years, 30 to 40 years. So the 10-year Japanese government bond is at the highest point it's ever been in a long time. So that's probably not a good thing either. Um, but it's hard to tell, right? It's hard to tell. But from the cycle point of view, we should try to hit a bottom sometime in September or whatever like that, right? So this one is August and the other cycle says September. Okay, September. And I think if I increase the data, all right, between the two, you'll see that it's gonna be towards probably October. So let me get the recent data. Let me get rid of some of this data here, and then we could look. And it's probably gonna be, let's see. So we still have this 362, so three something, right? 350-ish target. And then now we have this dominant 119. You'll see it in the gold when we do the gold one. But yeah, the 90 seems to be disappearing as a dominant force. Okay, here. So now this 120-ish cycle is coming through. So it looks like if we take the recent data, we probably might have a bounce in July now because so this 90 cycle is disappearing. All right, gold. If you want to go up, so if silver and gold wants to go up, it's going to be very short. It's going to go sometime into the first week of August if you're lucky. Maybe this is where we're going to have to be. So right now it's not stable. The stable one right now is 300, right? The 350-ish. Okay, so this 362-day cycle says September again. All right, so that seems to be where we want to be. The low of gold and silver miners will be September. So let's look at gold. Let's look at where gold is. Okay, so with this data, we see 359. Okay, so similar, right? Similar. This one also September. And then we have this 123. So again, similar. So those are the two dominant cycles we have now. And this one says we're going to go up until August, maybe mid-August for gold. Okay, and then after that, we're going to dip back down into November. So this one says like probably the real low, the major low will be November. Okay, and yeah, we'll see. We'll see if that's true. All right, so we're going to be looking for that. Um, let me see if I extend this. Let's see what happens. I'm pretty sure this is the same thing. I'm going to get the same kind of thing here. If I do this peak over here. So yeah, 350. So if I just did the data up until the peak, around the peaks, 350. Okay, that's dominant. We have a 190, so that's close to the 210, whatever we got before. Um, okay, so yeah, and then you see these little peaks here where it used to be the 80 and the 90. So that used to be important at some point in the past, but it's no longer important apparently now. I don't know. See, so I could make it important. So let's say I get the 90. Yeah, this one said we would have had a good performance in June, but again, like this 300 something is still dominant, right? So, yeah, this 350, 360, 370. This one said October, September, October will be the bottom for gold. So we're still stuck because of the dominant cycle has taken over everything. So I don't know about these smaller ones like this 120, 90. Does it matter? I don't know if it really matters. Right now, it looks like gold is following on course with the major cycle here. 350 to 360 to 370, one of those days, okay? 350, 360, 370 days. So you could trade it, but I'm not interested, right? Like I said, it's going to go sideways. It's going to go sideways. And even after September, October, it could just still go sideways. Like it might take until January to go up. I kind of told people that Bitcoin probably won't do anything major until sometime in December, maybe even January if it's a late cycle. So you could see a lot of bottoms in Bitcoin, but you buy it, it goes up, but then it goes back down, right? That's the best case scenario. It's going sideways from here. The worst case scenario is if in October, if the stock market does start crashing in September, October, it's going to drag Bitcoin down for sure. Gold can probably ignore it, silver ignore it because that, can decouple from the stock market. So sometimes gold and silver follows the stock market, sometimes it doesn't, right? Silver is more of an industrial metal. So silver, if semiconductors goes up, you could see silver go up with it, right? Because some parts of the industry, the AI infrastructure will need silver. They probably won't need much gold. There's not much gold in chips. I mean, the when I was in university, when I made the chips, they did use some gold for the wire bonding. So they call it wire bonding. They would put the wire from the edge of the chip into the packaging. But that's old technology. I don't think much yeah, many people would be using that right now. I think that would be too slow. They actually do flip chip and other yeah, I'm going too deep into it, but but yeah, you can look it up. You can look up flip chip, wire bonding, packaging. So packaging companies can do well. Maybe I should start looking into that. I don't know. I don't know if there's any good semiconductor packaging stocks. Maybe that's good because most people went into the optical side of things. Optical makes more money. They get better margins. The assembly stuff is probably not even done in America anymore. Most of those stocks are probably Chinese, Taiwanese stocks, honest. Yeah. I don't think you're going to find companies that do that type of work in America are listed in American stock markets. All right, let's look at Bitcoin. Like I said, this thing should have done better, right? You see, like, hey, the cycle says you have a chance to use this for your benefit. So I want to reiterate, cycles doesn't mean like, oh, this pink magenta line is going up, it the stock has to go up. If the pink magenta line is going down, the stock or whatever it is has to go down, right? Commodity, bond, whatever. No, it just means the wind is in your back. So you should really think of it like something like a season. Like, okay, it's summertime, it's winter time. So it's going to be on average colder or warmer. Or if it's like the better analogy would be wind, right? So back then you had to have wind to sail around the earth. We didn't have like oil and steam engines and whatever, right? Way back when. So no diesel. Nobody came up with like the internal combustion engine, whatever. So back then you had to use wind power, and wind comes and goes, right? Sometimes these months the wind flows east to west, and then some of these months the wind flows west to east. So that's all you have to think about when you look at these cycles. It just means like if Bitcoin did want to go up, the wind was in its back and there was a better chance for it to go up. So you could see like, okay, you know what, during April, March to April, it did have a chance to recover. But then like by the time we hit this little dip here, it should have went up again in June, but it didn't. It didn't. It went down. So that gives me kind of a pause, right? A pause here. I'm kind of looking at it like, uh-oh. So this cycle says like we're going to be peaking out sometime in July, and this thing is just going to go down, 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 down. That's what I'm afraid of. If it's so weak like this now, and the cycles is going to turn against it, the wind is going to be pushing it down. Will it actually like do any kind of movement up at all? Because I did buy some last week. I thought it was just like, dude, people are so bearish on Bitcoin right now, like very bearish. And either it's just going to have a good bounce for a little while, maybe a month or so before it goes back down, or it's just going to go back down now. I don't know. because we are about to turn. We are about to turn, and then it's going to go down to September and into December. And that's why I kind of told people it's like, well, if you're looking for long term buy of crypto because you think it's really cheap, don't be surprised if it gets a lot cheaper sometime soon. So you could trick people when this thing bounces, right? If this thing does bounce, it could be a good trick, but it could be a very good trade because people are just overly bearish. This has to bounce. Now, if we just look at like these old cycles here, 85, whatever. Let me see if I can find something else. Let me see if I can find some other cycles, if I can find them. Okay, go back here. So yeah, it's like it's this 250 is very strong. Actually, the dominant force should be about 200 days. So this 250 days. So if I look at this, it's like, okay, see, it kind of like it aligns with that top back in May. So if I just use this 250 by itself, it's fine. Yeah. If I look at the 80, however, you know, it's kind of like, oh, okay, that's not good either, right? It's just like, oh, this should have been a bottom in May, but it didn't. It was actually a top in May. So, yeah, Bitcoin, just like gold, it's not stable. None of these cycles are very stable. So, it's not like the S&P 500 or the Nasdaq. Um, it's hard for me to really, 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 really say convincingly I would trust what I see, you know, right now. It just fluctuates too much. This one here, if I just do a little bit different sets of data, it said like June would be the top. Yeah, that's what happened, right? June should have been, but it wasn't. Same thing. And as I add this, so there's not much difference right now. And again, it's just still going to December. So December is probably where you want to be if you want to be play it safe. If you're buying anything now, just just don't expect it to go up at least a lot. Okay. The base case will be like it's just gonna go sideways. Worst case is it will make a major dip. It will make a big major dip sometime. And Bitcoin can do that. It can do that pretty easily. So yeah, it's hard to say right now, but this is dominant. This 80 something, this 250 is it definitely looks very dominant here. Okay. All right, let me see this one. Yeah, it's still dominant. Doesn't matter what kind of data I set up, it's dominant. All it does is like all it's doing now is just shifting the phases, you know? It's just kind of like, oh, I'm pushing this cycle over here, that cycle over there. But for the most part, yeah, this is dominant. So this 80 something and 250, but everything says December to me. So I wouldn't trust it until December. Probably people are gonna sell it for a loss. So if you want to buy it, yeah, that's where I would buy it. Okay, Ethereum, same thing too. They all go move together. So gold, silver, Bitcoin, yeah, wait until like late September into October to even consider buying anything in Bitcoin, silver, and gold. All right. And for Bitcoin, probably you're better off waiting all the way to December, January. Maybe. All right. All right. That's it. That's all I want to talk about that. The cycle stuff. Okay. All right. Now let me continue on the video. So, or, let me see. What's more important here? Let me see what's more important. Okay, let me just do some chart stuff first, and then I'll read articles. Okay, I'll go with that way. I'll go that way. So let me get my trading view loaded up, and then we'll go for there. Yesterday, I was talking about like real estate investment trusts, and I had that portfolio yesterday. At the end of yesterday's show, go over there and take a screenshot of what I did because that was the same list I had about over a month ago, maybe like a month and 2 weeks right now. And based on the monthly performance of the real estate investment trusts, the REITs, okay, a lot of those stocks were up like 15 to 38%. there were only 2 losers. One loser was like less than 1% loss, and the other one was less, like about 7% loss. So if I was really lazy, I said like, dude, I just pick the best looking sector that's changing, and then I'm going to just buy all the stocks. If that's what I want to do, then let's see what happens. Because I think like that's really good for some of you people that, some of you people, I don't know, maybe some of you people have a lot of money lying around, and you got no time to be deciding what to buy in terms of stocks. And if I just do it the dumb easy way like that and it keeps on working, that's what I planned it to do before, like the stupid Iran war and now this semiconductor bubble. It's really distorted the market. This market now is too weird. It's hard for me to say like to this is a good time for me to test this strategy, because because the market is so messed up. But um and I tried it with the REITs. I just went like, okay. Let's just try it with one thing right now and see if it works. And I tried it with that, and looks like the dumb, stupid way is working. No AI help, no nothing. So I tried to make it as simple as possible, and it worked. Um, and I'm guessing like if I can get AI to do it, it could probably do a lot better in some cases than me. And I have to see if I could get that there. All right, so with the gold, let's look at the gold on this thing right here. Oh no, not this, not this. Let me do the gold futures, and then we'll look at silver. Okay, so it's almost at the monthly 18 moving average. So this probably would be a good time to see a bounce, even if it's short lived. So even if this thing is like so small that it's just halfway through this candle in June, because we only have 2 more trading days in June, and then before it goes down, and then you could buy gold back at 3,500 about. I think somebody, Eric said like Samantha Leduc was claiming it could go down to 3,000. Okay, maybe it goes down here, it bounces a little bit, and then comes back down into like late, um, late October, November, December. I don't know, but I'm gonna be watching this right here, okay? Because this is very significant. This bar here is as large as, well, not really, because this bar is actually this big in February, okay? But it's a pretty significant bar compared to the previous 2 on the monthly. So we have to listen to it. I doubt it's just gonna recover like this. Okay, I don't think it's gonna do that. So watch for a bounce, but then it's gonna go back down probably. Yeah, yeah. But you know, don't don't hold your breath, because it is a commodity, and commodities can do whatever they want, because many commodities do V-shape ups and downs like this very easily. That's why boomers love commodities. This was before Bitcoin. You have to remember, stock market was boring back in the 80s, 70s, and 80s. What people liked for the excitement was trading commodities, and that's why that movie Trading Places. What was the commodity they use in Trading Places? They were betting on lean hogs and concentrated frozen orange juice. Okay, they weren't talking about stocks, so they were talking about commodities. So this is what I'm going to be watching for. Yeah, so this one big, right, as well, for silver. And it's also near the monthly 18 moving average. So does it do this? Probably not. I don't think so. Maybe halfway through. Okay, maybe that's what it's going to do. So we're going to see how this goes. All right. If you're itching to buy silver, definitely watch it around $50 a troy ounce. See how it does there. If it fails there, then yeah, we're probably going down to 35 again. I don't know. It's just going to lose all its momentum down here if it does that. So pay attention. Okay, in the next half of the year, we have 6 more months of the year. So you got to be patient. I'm not in a rush. I'm never in a rush, right? Because when I bought gold and silver mining stocks, it was late 2023, right over here. Right over here. I wasn't in a hurry. I was chill. And then once we got to 2024, it wasn't that exciting, right? It went up a little bit in silver and gold, but it's just like, well, gold was doing a lot better than silver at this time, I think. Silver was kind of still boring. Only until like 2025 did we get more excitement in silver compared to gold. But overall, it's like patience. This stuff takes a while. This is a slow grind right here. Um, and when it wants to go down, just let it go down. Don't be a hero and come in and be like, okay, this is the bottom, we're gonna go up again. No, that's not happening. That's not happening. It's gonna be like this. Like, this is the best case scenario. It just does this before going back up. Worst case scenario is like we're gonna have to do a lower range before going back up. So the better thing is, like, you want to have a range that stays up here in the upper half of this whole thing, like this whole thing here, right? All the way down. So from 35 up to 120, that whole area could be activity in between. Just based off of these two large candles here. Yeah, it's going to happen like that probably. All right. Okay, done with that. Now we're going to go talk about some biotech stocks. So yesterday I mentioned biotech, healthcare, relative performance, and I said, like, something's happening. Something's happening in last week. So the last several weeks, and then the final week of June. So we only have 2 more trading days, but that's not a week next week. Okay, the final full week of June, biotechs, healthcare did very well. Okay, that was one of the places that did very well. Okay, so let's look at some particular stocks, right? Moderna, my favorite. This is my favorite. So last time we were talking a lot about it during the hantavirus thing, and I was hoping that the hantavirus would make it stay above here before shooting up. That didn't happen, right? That didn't happen. The hantavirus came and went. That's what I expected, but I thought Moderna would just like hold some of its level. But when it went away, it just went back down and retested what it was before last earnings in May. So that was around $45. And then now we're moving back up here. See? So let me get rid of this. So that didn't happen. This range did not happen. So now what we're going to do? Should we get extra bullish again here? Is this where we should say, okay, it's time to get a lot serious? And I had a big target for Moderna, like back to COVID highs or more, I think. So COVID highs was around what? 400, 450. It could go even higher. I think one of my targets said it could go up to $700 a share. So right now it's like 67, right? You could make a 10 bagger if it goes that high. If it goes that high. So this looks very promising. So after last week, up 12.59%. So after options expiration, this is one of these top stocks. Very good. Right there. Very good. This is what I want to see. So is it going to do this at a higher range before shooting up? Maybe, right? That's probably what I expect. So I'm going to be watching this, and then I probably will do a lot of leverage at a certain point. So if you guys use options, you're already like thinking ahead, like, okay, I'm just gonna buy leaps or whatever. I think Kyle might have bought leaps when I told him, like, okay, yeah, Moderna looks like a long term. So he might have bought leaps down here already. But you're probably not too late to buy something at this price. I just don't know what the option pricing is right now. You can probably wait a while and see if it can get cheaper, but this is what I expect. It's probably going to go sideways, and then by the time September, October, November hits, then we can finally get out. Okay, because I do expect weakness in the market. I just don't know if it's going to pull down the biotechs a lot or a little. If it does it a little, then we won't have to worry. If it does it by a lot, then it could revisit at a lower price, right? You could see it go back to 50, which would suck. But if the stock market does pull back hard uh, with the semiconductors, because I think a lot of people are looking at the semiconductors kind of like, ooh, semiconductors makes 45 to 50% of the S&P 500 now. Its influence is too much. And now we got SpaceX coming in the mix. SpaceX on June 7th, SpaceX will be part of the NASDAQ 100. So it's not going to be part of the S&P 500, but it's already part of the NASDAQ 100 already. Oh, good luck. I think something might happen, right? That will make things worse. So that's something I'm looking at. HIMS is the other one. So this is the peptides one. All right. It ended the week pretty well. Not impressive, but it's pretty good. Okay. I mean, this is fairly good. It went down, it retested this, and it went back up. Okay, that's fine. That's fine. That's not bad. That's not bad. Okay, and this moving average on the weekly is curling up. It's above like this. So this thing will just go up, and this thing will go up, and then finally, again, this thing will also go sideways. So I think you can go, you could probably wait a while and see if it just sticks around 35, or maybe it wants to revisit 30 again, but this looks strong. The way it's ending, it looks really strong. All right, so let me put back the volume here. Okay. Okay, so we'll see. The volume data doesn't show anything that tries to make me want to go like, okay, this was a significant event. No, it looks like this one and then this one, these two bars had the better volume event. Okay, and then this one at the bottom here. So this red one over here. So this one had the event over here. So nothing on the volume side makes me look. So let me look at Moderna again on the weekly. So let me look at the volume. Yeah, a good volume on Moderna. So this one was the hantavirus stuff, up, down, okay, but it didn't make a new low. Good, and then we got these two volumes here. So let's see if this thing will try to make it go sideways, or we're gonna keep going up a little whiles, because I expect it to go above 75 right away, because it's at 67 right now. I don't think it's gonna go 75. So the other peptides talk I want to talk about is Novo Nordisk, all right, Ozempic, Wegovy. So this one's popular. It already had this hype, and then we had a top here in 2024. It fell down, but look at it now. Look at it now. We got like a recovery here a little bit. So we got this earnings, and they have a little dip, but it wasn't a significant drop like the previous ones here, because we got like, okay, this earnings, we went up, we had a false breakout here, all right, and then we had earnings and it pushed it all the way back down. So this will be important. This bar here is very important, and that coincides with this area. So that's why I drew this box. I drew this box because there was a lot of fighting going on in 2021, okay, before it pushed out. And we're seeing it again with this candle here. This is a big red candle. And then you see this other one right here as well. It just drops and cuts right into here. And then we're fighting. And then we go underneath. Okay. And then we're trying to get back in that box. So NVO, Novo Nordisk, watch what happens. Okay. Between 45 and 55, approximately, somewhere around here and here. Just pay attention what it does. Is it doing this before it goes up? Okay, so maybe you want to start looking at buying it every time it goes underneath or at the bottom of this box at 45. All right, so that's probably what I'd be looking for. Eli Lilly is always strong. So LLY, Eli Lilly, yeah, this, you can't beat this one. But it's been in a range since 2024 in July. So it's kind of been stuck here, okay? But now we're breaking out. So I think for boomer stocks, you probably just buy Eli Lilly, LLY, and don't even think about it too much. It's kind of like one of those stocks where you don't have to think about it. It's just too strong, because they make other things other than like Ozempic and Wegovy type peptides, like oh, Novo Nordisk, the only reason we had such a big run up here was because of a few drugs. Well, Eli Lilly makes all kinds of drugs, so it's more diversified in that sense. But those three are the ones that are popular for the peptide business. So if you really think clavicular is going to sell peptides for the masses, people are talking about it. And I mentioned like there was a 79-year-old dude that got special permission to get early access to retruitide, whatever you pronounce that freaking thing from Eli Lilly, that clavicular somehow has access to as well. Black market or what? I don't know, but he's getting access. He always promotes it. So probably big business from that drug. Okay. All right. Let's look at some other ones here. Let's look at some other ones. So these apparently also have some peptide related business. I'm not 100% sure what it is. I just asked Google and whatever Grok, all the AI, give me some other stocks that have some peptide stuff, related stuff to it. And I just look at the charts and I go like, oh, okay, well, GPCR, structured therapeutics. Yeah, it doesn't look like it's interesting to me. Right? Look at this. What? So this looks too risky. I'm really not liking this. So not really sure if I want to tell people to be like, okay, this could be something good. I'm probably gonna have to do more real research on it. I'm not a Martin Shkreli. He's probably the one to ask. So maybe you should ask him. But I know like he's already put out a lot of interviews and videos. He hates peptides. He thinks it's a scam. I'm pretty sure. I haven't watched any of the videos, but I'm pretty sure that's what he's saying. He doesn't like it. He doesn't like it. He doesn't think it's a big deal. All right, Viking Therapeutics. Okay, this one looks more interesting. This looks like it has some kind of range here after calming down, but the chart overall looks ugly, right? You got like this thing, bar. I don't know. I don't know. I think a lot of these small cap pharmaceutical stocks, they're gonna have this type of stuff. Now the big ones. So big boys, Amgen, AMGN. Okay, this one is another boomer one, kind of like Eli Lilly. They might be getting into the business of peptides. Maybe it's not really a big component of it, but overall the trend is very good. So maybe you might as well just add it just in case. Now, Pfizer, right? PFE. This hasn't done well since COVID-19 at all. So Pfizer has been a dog pharmaceutical. Look at that. Ever since COVID-19, all the way down here. So from a chart perspective, this is ugly. This breakdown for the last 3 months, ugly right there. 3 red candles. So no, can't recommend that one from a chart perspective anyway. All right, Zealand Pharma. So this one is a Danish pharmaceutical, just like Novo Nordisk. Okay, but you can only buy it on over the counter. And this one has something to do with peptides too. It also has this ugly look, just like GPCR, like and then duh. So they both have a similar ugly looking look right there. So I can't recommend this one either. But um, maybe if it gets more volume, I don't know, because you could see like people were not interested in this stock back in 2012 to 2021. Only recently we start getting some good volume here. All right. So maybe it's something to watch because for a over the counter stock, it's starting to get interest and 90,000 volume. Man, even the volumes, yeah, that's still not even that good though. It definitely has more volume, but not the volume you would think like, okay, I think it's something meaningful. All right, here's another one. Backham Holding. I think this does some distribution or something of the peptides. I don't remember. But it's not directly making peptides. And it doesn't have much history. But BCHMY, maybe it'll do something later. But right now, can't recommend this one. So these lists, these stocks on this list here on the right, you can just take a screenshot. That's the peptides we have. Those are the peptide stocks we have. All right. Okay. So now we're gonna look at energy. Let's look at energy. All right. So yesterday I mentioned two energy stocks, AROC and ESOA. So I asked the AI, yo, give me similar looking small to mid cap type stocks with similar valuations and good looking charts. How about that? So give me these ones. I think I recognize some of these names already. I see USCAC, USAC. I recognize that one. NGS, I also think I recognize before because I looked at a lot of natural gas stocks during the um what was it, Ukraine, Russia debacle. So I was like, well, some of these look very interesting. So you could see like from 2023, we went from like $10 to $40. Very good growth right there. Obviously, it's not as good as like, Palantir or whatever, but hey, it's good. It's good. So will it continue going up? Right? The trend is excellent here. So NGS, natural gas services. All right, KGS, Kodiak Gas Services. This one a lot more volatile. Okay, looks like a lot more volatility on this guy. Let me see how much volume we have. Millions of shares. Okay, good. So very strong so far since 2025, late 2025, December, November. Okay, and then we're going up here. So that's something we got to look at. So this stock also going to be good on the list. All right. RNGR. RNGR. Not that interesting so far. Not that interesting so far, but it could be interesting. So let me get see. Let me see. Here, let me use this. Okay. So somewhere around 15 bucks we've been dangling here. So since 2017 it looks like, before crashing during COVID and then popping back up. But ever since then, we've been stuck here. This is kind of like where we've been stuck at. So is this thing about to go up? Hmm. So Ranger Energy Services, RNGR. Okay, gonna put that on the watch list. USAC, yeah, heard of this one before too. All right, so the top here in 2014, also similar problem. We're stuck here. For quite a while. It says 2024, like this. So does this mean we're gonna finally break out and move up? Pay attention. So USAC. Here's a Canadian one. EFXT. Very good. Since May of 2025. Not bad. Goes from $6.60 to 25.73. Not bad. Not bad. So is this trend going to continue on, or we're just going to wait a while? If this thing, if a lot of these stocks just take a breather right here, then that'll be a good opportunity to buy, right? So any of these, you see that, then you should take your shot. All right. So the other two I mentioned yesterday, ESOA, try to remind you guys that we are at the top here. We touched the top at around 20 bucks. ESOA, we had several good earnings so far. Hopefully it can continue. If it does, then we can go up to the next level. Okay. And then AROC, Arch Rock. This one's already trying to break out. So I'll be watching this one as well. This one. So ASOA is like what was it? Energy Services of America Corporation. I think I talked about this 3 months ago when I first talked about like natural gas and other energy stocks. I looked at it, I was like, "Ooh, this one looks really interesting." And I think we should start looking for other ones that look the same. Okay? Because I think the small cap, mid cap energy sector is the one that's going to move up first. And now oil is being pulled down, right? We have a problem, but natural gas is not affected because there's so much heat in Europe. We're exporting a lot of natural gas right now to them. After the whole Iran stuff with the Strait of Hormuz getting closed down and the Bahrain and Qatar refineries are blown up, the ports. won't be repaired in 5 years. So we're going to be the ones that actually give them the natural gas. So I think these small mid-cap natural gas equipment, pipeline infrastructure type companies are going to make big business coming down. I think natural gas will be a big winner. Okay, a big winner in the following years. So even if crude oil doesn't pop right back up in 1 year, natural gas will. Natural gas will. I think crude will probably recover maybe sometime early next year, but it's really going to depend on China. I think China really affects things a lot. So no rush in getting the oil stuff. All right, that's it for that. I think I'm done. Okay, good. Okay, so now I'm gonna play a little video again. So I played a little bit of this last time. Okay, and this does the Wyckoff with the what was it? Or the Weiss wave. Yeah, WEISS. Okay, Weiss wave. All right. So let's continue on with that video because he's gonna teach you how to use the volume. Look at volume. All right. And then I'll probably try to pause at certain points to give some context. Maybe that's better. I don't know. Because he's going to go over Palantir. So Palantir is the stock he's looking at.
Hey, fellow Wyckofians. So a lot of people are asking about GME's recent price.
So I'm going to skip ahead a little bit. You can watch the first like 5 minutes yesterday at the end of yesterday's show. So I'm going to go like up maybe 3 minutes in
upwards action. So it's coming from a distribution, a development of a range, and then a markup out of the range. So these are the two areas here on the chart where you can see that bulls are starting to establish their positions pretty heavily. Now on this bullish wave, actually I need to get these things out of the chart. I don't know if I can do it right now. I'll probably have to wait a second. Let's do that. Let's see. I think it's on the canvas. Give me a second. Navigation, always invisible. Pane, always invisible. I think that's what I need. Could be wrong. No, we're good. So you can see that the wave's increasing here. You actually don't come back down to test this area of demand at 630, and the volume, right? So the volume is starting to decrease. Let's get the moving average out of here just for a second, just so you see the volume bars more clearly. You can see a drop in overall trading as the bullish wave is increasing, right? Bullish wave is increasing, and you have higher lows. So you have a test here of 730. A push back up to about high 8s, and another test of that 730 before that reaction. So you have a nice double bottom over here as volume is decreasing and the bullish wave is increasing. So this area right here on the chart on PLTR is the establishment of smart money right here. The big establishment of smart money. They're getting into their position. Mark out of the range with how you're starting to get this area of consolidation once again, and this is an upwards trend. It's a bull channel of supply and demand. Now the interesting thing here is on the pullbacks to demand, you can see that the Weiss waves are showing very minimal bearish sentiment to the downside. And as you're coming down to test here, you're still getting the increasing bullish waves, especially here. Right? There's way more establishment of long positions than shorts, or I guess bearish sentiment, right? Selling orders. There's not a lot of strong sell orders here. There's still more and more accumulation. So whenever you're coming back down to this area on the chart, on those pullbacks, it's just more accumulation, more accumulation, more accumulation. You understand? The bearish or the bullish waves, excuse me, are just continuously increasing. Now, the important thing here is you can interpret this not only as like bulls stepping in, right? And going long, the black waves are accumulation, the red waves are distribution. But you also need to interpret VPA as a possibility of absorption or exhaustion.
All right. I think VPA stands for volume profile. Okay, something. And we already kind of been doing that already a little bit from time to time. So let me show you the Palantir chart. Hold on. Let me see. Let's see. I can bring this up from this panel. All right. Here. Okay. So this is what he was looking at. He was looking at this area here. You know, what's interesting is that, like, if you look at the Vice Wave indicator, you know, it says that this is bullish. This bullish. So this area here was actually bullish. So if you need help, you know, you probably should read that book, Trades About to Happen. Trades About to Happen. This is where all this information comes from. Trades About to Happen. All right, trades about to happen. Okay, so let me see. Let me get a link. Trades about to happen. Let me get a link for you. Okay, you can go to Amazon, or you can go anywhere to get the book. I'm pretty sure you know how to get the book if you just want to get it for free, whatever. I'm not going to tell you how to do that. All right, so you can go Trades About to Happen. Got some other non-text semi-charts to check out sometimes. Oh, okay. Okay. Yeah, I'll probably put it in some list somewhere. Yeah. Yeah, I already went over a bunch of new stocks from oil, natural gas, not really oil, but yeah, we're gonna have to look at more of these as the time goes on. The next 3 months, there's gonna be rotation. I'm pretty sure of it. They're gonna be out of. They're gonna be out of. People are gonna get out of semiconductors. I'm certain. I'm certain. So yeah, trades about to happen. Adaption of the Wyckoff methodology for the modern time, or something like that. So you can go there. That's the link. All right, that's the link. There you go. Trades about to happen. David Weiss, Weiss. Okay, so this area here apparently is bullish, huh? Bullish. Now, if we just look at the two major points of volume, look at it. May 9th of 2022. So this is Palantir, right? We had a long drop, and this was the largest candle with volume. Okay, the other one that had large volume and size of the candle was this point here, this red. If you put this red and green together, this was probably combined. This was probably a very strong candle, and all it did was give a temporary relief before the next move down. And that's the thing you'll see all the time. Like if you look at Bitcoin, right, you're going to be like, dude, stop. And then you have a lot of volume come in, stop it. And then you go sideways, you go up, and then you go down. This time, you know, it didn't go sideways much at all. It only was like a couple days before trying to go up, and then failed, and then went back down to this $8 level. All right. But in any case, let's say this is the largest one, right? This is the largest one. And I can make this like disappear these here. Okay, so you can see this one, this candle here. Yeah, you can see it, right? Okay. And then I'm going to put it back. So this range starts. Once you get this huge volume come in, it stops it from moving down again. And once again, we move up for a little while before coming back down. But unlike this case, we didn't go down to a major new low. Okay, we stayed here for a while. We made another kind of like soft landing here. But again, this is not like some big crash like we did here, okay, or here. So that didn't happen. So we could see like this whole area is a range. And it took about between May to 1 year. Okay, so May 2022 to May 2023 before we broke out. It took 1 year of boredom. And a lot of people would probably just give up at that time, right? But this is the stuff we like to see. You want to see like it to go crazy, and then this is IPO, remember. So you could look at this as a model for SpaceX. I don't know if SpaceX is going to follow this. So it's going to be like, oh, crazy, crazy, crazy people buying it up, and then for about a year it goes sideways, and then it crashes back down, and then people are just going to be like bored of SpaceX for a year, and then finally we start moving up, because this was the first time I started buying it was when it hit $7. This was around, I think, the point where Kathy Woods started giving up too. I don't know. Kathy Woods was starting to sell Palantir. And I was like, what? Are you stupid? This is the best time to buy Palantir. I'm just going to go against you and buy some. So I bought some here. Okay. And then once it started recovering up to the 20s, this area, that's when I started telling people to buy. Okay. Because I was like very confident at that point. We were just going to go a lot higher because we were already revisiting back at the same level we were here, right? So once you start coming back up here, you're telling people, oh, yo, start buying. Start buying, start buying. It's getting closer to 20, getting closer to 20. Okay, it's above 20 now. It's above 20. Keep buying, keep buying. And after that, boom, we had this huge move up to the 200, right? That's it. That was it. It finally hit 200. I pretty much sold out around 140 ish. I was pretty happy with that. I was pretty much done. Okay, that was good enough for me. I wasn't gonna be that greedy. But you can see like there's ranges here. This was a range. This is a range. This is a range. There's definitely ranges, and you could see with this volume chart, you could see like, oh crap, there's a ton of volume going all the way up into this point, and then it starts slowing down. This whole part here, you see like the volume started dripping. This thing, like nobody's doing anything anymore. They're just like holding and waiting, holding and waiting. And this week we start seeing like this new volume coming in. So I think it's gonna bounce, that's just my guess because I just bought it right on Friday or whatever. I forgot. Thursday, I think I bought Thursday, right? Friday was up. Yeah, Thursday was down. So I bought it. I bought some on Thursday. But it's just for a quick trade. It doesn't mean like if there's more volume coming in here, let's say, right, you're gonna see big volume, and then all of a sudden it just like starts rolling back over. Better watch out. Better watch out. That means we're just gonna crash. Okay, we're just probably gonna crash. So pay attention. Pay attention. We haven't seen this type of volume since here. That was it. That was the last big one, right? And that candle was a nice red candle in August 18th. I don't know if it was news or whatever, but this was the earnings. And then 2 weeks after, it had this huge volume red candle. The candle itself was small, right? Like, look at it. It's pretty tiny. It's pretty tiny. Um, so huge. Like it barely goes anywhere, right? It doesn't get far away from the top of that candle. So that tells you a lot already. It's just like, why is it struggling so hard to get further away from this? And then after like what, January? So this was even before earnings, like on February 2nd. Like you see, we went down. We went below this candle, right? Because we started dipping here. And then there's another big volume coming in. And then we started making this lower range. Okay. Now, it doesn't mean like it necessarily has to go down, right? We could just easily recover and go back up. This is what happened with semiconductors too. Semiconductors had a high range, it went to a low range, and then it made a breakdown, but it was false. And then we shot back up, right? So there you go. Those ones above I picked from Fidelity 401k, so managers are trading those. Okay, cool. All right. Excellent. Excellent. Maybe they're part of sectors that we should be looking at. All right. So it could do this, but there's no guarantee. Okay. So watch out. Watch out. So that's why, like, looking at the volume levels, it gives you a different picture. Gives you a different picture. All right. Than when you're just looking at price by itself. So volume gives you that extra insight. Obviously, it's not going to be 100% accurate, though. Okay. I think you're better off. You have options, volume, everything together that you can look at, and it'll be a lot safer. But right now, we're seeing these things here. So let me get rid of these drawings. Oh, all over the place. Oops. Nope. Don't want to delete that. All right. Okay. So let's get back to this thing here. So the video was talking about this area, and apparently this was bullish. Okay. So that's something you wouldn't recognize right away. You would just be seeing, oh, I see a nice large volume candle here. And you're kind of wondering, but what's going on? After that huge red candle, we just went sideways. It doesn't necessarily look bullish to me. Why don't we just go up? And it didn't take until the earnings to push it up 28% to get to the top of this range again. So let's continue on with the video. Okay. So the video shows you a different thing.
Okay. So over here, on this pullback to 730 and that retest of 730, even though you are coming back to test and back to test.
So let's go back. So you see that? So he's looking at that C area. See that Wyckoff C area. Now, if you just look at the absolute volume, it's going down. Okay, we're going sideways, but it doesn't show me anything clear. But the Weiss wave is going up. All right, so that's where we want to go. So I'm going to push back like a minute so emphasize this point. So that's why I ended it at this area last night. So I'm going to replay this part here.
You're still getting the increasing bullish waves, especially here. Right? There's way more establishment of long positions than shorts, or I guess bearish sentiment, right? Selling orders. There's not a lot of strong sell orders here. There's still more and more accumulation. So whenever you're coming back down to this area on the chart, on those pullbacks, it's just more accumulation, more accumulation, more accumulation. You understand? The bearish or the bullish waves, excuse me, are just continuously increasing. Now, the important thing here is you can interpret this not only as like bulls stepping in, right, and going long. The black waves are accumulation, the red waves are distribution. But you also need to interpret VPA as a possibility of absorption or exhaustion. Okay? So over here, on this pullback to 730 and that retest of 730, even though you are coming back to test and back to test, the wave remains green, right? Possible sign that those orders here are being absorbed before you make an exit out of the range. Another thing is that you can expect to see potential pullbacks based on what you see on the Weiss waves. So as you can see on this one over here, you have increasing bullish waves right up to here. It's a pretty big wave, but you're starting to see something in regards to the candlesticks, right? You see longer upper shadows, especially on this one. First on this one, initial weakness, then on this one, and finally on this solid bar, right? This solid bar up here on the weekly has an open of 1882, a low of 1808, and a close of 1820, and with a high of 2024. So you went all the way up to 2024, you opened at 1882, right? But you closed at 1820. You closed above the previous candle's close, but technically below the open. These solid black bars can be a sign of a potential reversal incoming, right? Lining that up with this shooting star candle, which has high volume and is at the upper portions of this bullish wave, can be a sign of bullish absorption. So sellers are absorbing those bull orders, and then you have that pretty steep reversal. Is a 15.3% candle to the downside, followed by 6.5%. So pretty big drop from there. So that's just one way to interpret potential retracements. Not only that, but you can see that from the peak of this candle here, right, the highest volume candle right here, to the next peak, it's actually decreasing in overall effort. But on price, you did create a higher right side. So there's an anomaly right there. Technically, this could be labeled as a rising wedge. It's not the prettiest, but it is. It still is, right? And then you have a bearish breakdown. So you have an anomaly here, and you're at the upper portions of a bullish wave, which could mean the end of a trend. Now, even though this did drop pretty severely, what you see once again is that the bearish wave really didn't last long, because on the tight spread consolidation immediately after in this general area, you have another bullish wave increasing, right? You have this little range here of demand around 14 and supply around 16. Had another bullish exit from that push down, congestion, accumulation, and a bullish exit. Now that's just micro. On the long-term trend, you're still trading between this level of supply and this level of demand. But you can see that the pullbacks, right? This pullback, this pullback, this pullback, even though they look severe short-term, it's still within the longer trend of just massive amounts of accumulation. This chart is super bullish, or was super bullish. All right, white coffins, we were talking about it down here. And with time, I mean, this is severely bullish. Long-term accumulation with high volume. And you got one bullish exit, and then you got another one right here. A push up, a test, and a continuation to the upside. Now with PLTR, currently, you are starting to see some warning signs. Let's actually push this up a little bit here. There's some warning signs here because not only is the volume over here way higher than previously, right? Increasing volume. This could just mean that there's a lot of trading happening back and forth now. But you're starting to see that from the peak of this bullish wave, which is massive, right? From the peak here, you're starting to see a significantly lower peak. Now, this could keep going, don't get me wrong. The problem here is this. Look at, I don't have my highlighter tool, but look at the spreads of these candles here. These spreads, especially these ones right here. They are tight spread at an area where you previously got rejected here. You're attempting to break out, but volume is starting to drop overall. Right, starting to drop overall. So volume is decreasing. The bullish wave has significantly lower highs, or I mean, it has way lower highs, but you've already created a higher high on the price. So you could once again potentially see this, even though it's kind of messed up, as a rising wedge. All right, towards the top up here. You have two warning signs. Once again, tight spreads above supply, decreasing effort, and a lower bullish Weiss wave. We've seen this before, which could potentially signal exhaustion from bulls and incoming bearish takeover in a.
Okay, if you remember the chart I put up, that didn't happen. So that didn't happen. So he's talking about this area up here. He was thinking like it was just gonna break down, something like this, right? But it didn't happen. We went up further. We popped right to around 200, and then we just went sideways. So we didn't correct in price, right? We corrected in time. So there's two ways to correct. One is time and one is price. You can go sideways for a long time, which is equivalent to you dropping from here and doing this crap or whatever. You know what I mean? Like this thing could just keep on going sideways. We just do this and then we just go back here. We just this could last a long time before we move up again. Like it's gonna be really annoying for people. Like if you think like things just go up and down like in straight lines, again and again, there's only a few stocks I've seen that does that, right? One stock we talked about before was WGS. This one is really weird. Like I've rarely seen something that just goes down pretty much in a straight line, go back up in a straight line like that. Okay. And now it's stuck going sideways. So I think when I started talking about this stock, I was like, oh man, if it gets down to 30, I might be interested, you know? And yeah, it did that. It definitely did that. We got to the earnings. We got it close, pretty close to 30. Okay, $32, I guess, at this point. And we've been moving back up here because of this. Now, would I recommend this stock? This is a crazy stock. It's hard for me to just say, like, yeah, you can recommend. You could trade it. Sure, you could trade it. All right. But again, this is not normal. This is not normal. You're not going to see something like that. So for Palantir, right, it was like, oh man, I see the volume coming down. That's why I said just before I replayed the video, it's like, oh man, the volume's coming down. You see this, you're like, but you know, your crystal ball wasn't exact. It didn't actually just break down and do what? Just go back down here and make a new range here or what? I don't know what you would have expected it to do. It actually made a higher range before returning back to a lower range. So it's look, if you really want to gamble on guessing what the next several moves are, I think you're going to be in a tough spot. You know, you could try to estimate or do some guesswork, but don't believe that you're going to predict it exactly. So he thought probably, yeah, this was over. This thing was about to crash. Probably in this candle right here. Probably this candle, this red. Maybe that was where he thought, right? But it didn't happen. It didn't happen. So, yeah, all these things take time, you know, to study. You're going to have to That's why I said like you got to use a lot more tools than this. You're going to have to use a whole bunch set of all right, a whole bunch of tools from the toolbox. And you're going to have to integrate them in a way that makes it so that you can make the most effective amount of effort that you have in your own time. Okay. And that's why I kind of like it to keep it dumb as possible, but not too dumb that you just do silly things like you know, because you don't ever think like you can predict everything. Exactly. Yeah. I'm still confused why a giant volume candle would barely move price. Okay. You know what? When the candle is so small and there's a lot of volume, that has more significance. You know why? Because like people cannot agree where it should go. They all agree that it should be at that price. If you have a larger spread, if I had a lot of volume and I had a larger spread, but then you know, you could have it where you have very little volume and a larger spread too. Right? You could have that case too. And they all have different meanings. So I think you should definitely start watching those Wyckoff analytics videos. Okay. There's a lot of old ones they still have up. I know they privated some of them now, though. I've noticed. But if you go back to the old ones or you go to Stock Charts TV on YouTube, you could find the old ones where there's Bruce Fraser or Roman, the Russian guy. So if you can find all the old videos and watch them, they talk about that a lot. How come you have a big volume and small spread, or big volume, large spread, or little volume and large spread, or little volume and no spread? Those matter. All that stuff matters. Because if you actually have a bar that's small, all right, and you have a lot of volume, that means like people agree that that price is the correct price. And that's why you see Palantir go sideways, because everyone agrees that Palantir should be around $140. That's why it happened like that. If you had a large spread, that means your range is larger. Like Intel, you get a fat candle and it's like between 120 and 140 and a lot of volume. That means people only know that there are people that want to bet that it's worth 120, and some people that bet it's 140, and some people 130, and all the way in between. That means they don't know what price it should be on that range. So the range becomes wider, right? And you could go sideways at that range for a long time. So yeah, they all have different meanings. You definitely should just watch those videos. Because he just goes over all those examples. So go to stock charts or Wyckoff Analytics, and then yeah, you could see that because they talk about that all the time. How come, like, what's this? How come you got this candle here? Why was this important? And what does this mean, right? So if you saw this thing here, and then you go like, well, it looks like that's going to be a range, but look at it. Look at what happened after that. It stayed like at the upper half of this thing before the next earnings popped it up. Actually, yeah, HB bought it here. HB bought it down here when we had like that Monday crash. For some reason, there was a Monday crash. I don't remember what the news was in August 2024, but he bought it before the earnings. And then after that, we just ripped higher, right? After that, we made this huge candle back up that week from that Monday low all the way to the high of earnings, $30. So that was it. But then you see right after that, it didn't stay in that candle. We started moving up the next several weeks, and that's what made it go higher. So yeah, we have to look carefully at what the heck is causing all this stuff. So not all the time you're going to have like candles that have large volumes, and like this one. Look at this one right here, WGS. Look at this. It was a big spread, right? We went up and down, but we opened and closed near the same price. That's really interesting. Okay. And then the next week we go above it. And then the following week we go back down, back to it. But then you see in this like December 11th, that week, we went back to the top of the previous 3 weeks. And that would have been your signal to buy. That would have been your signal to buy. You're right. Once you saw this, you were like, ooh, it's time to look at buying this thing. This thing is ready to pop. And then the next week we started opening here, we went down, and then we went back up. Okay, that's good confirmation right there, right? So you could look at it week by week and go like analyze this stuff like, what's going on here? Right? What's going on? And that candle right there, that green volume for that slightly green, like this thing was slightly green. This was barely even green, gonna make it green, right? This could have been red for all you care, but it was like, dude, compared to all the volume beforehand, like what is this? Like this thing was so tiny, and then you see this monster one. That's when you know it's the bottom. That's when you know it's the bottom. So anyway, let me wrap this up the video. Let's wrap up the video.
Reversal. Now the weekly bar so far, if we zoom into this area, is a solid black bar with a tight spread, right? You still need to wait for confirmation, don't get me wrong, but if I were trading this, I would have my concerns, especially like this high volume candle here, which pushes up to this peak. You created a higher peak with obviously less volume overall. So there is a potential warning sign, which could take a little bit of time to play out. But if I were to have an educated opinion on this, it could potentially push a little bit higher, sure. But you are starting to get warning signs that the trend is potentially starting to shift. I see this area as more likely to be distribution than accumulation based on the concurrent high volume, tightening spreads, and diminishing bullish waves. So Once again, I think there's potential for this range to be established as supply here, demand here. So there could be a bearish play on PLTR all the way from 138 to a retest of 70 bucks, potentially, if that is the range. You could also establish this as another continuous uptrend. Sure, you can do that. Let's do that just to keep it a little bit less, 50% drop. But let's still label this. We'll do it as a rising trend because it could be, right? From demand up here or down here to supply. Demand, supply. Tightening spreads. Again, potential rising wedge. Whoops. Potential rising wedge. Right here. Anomaly from this high to this high, higher right side. Continued increasing volume. Lower high on the bullish wave. That could potentially give you a short play from supply at 140 to demand at, say, 90. Right? Before maybe another bounce, maybe a break of the trend. Who knows? Too early to call. But if I were to play this, I would play or begin to play the bearish momentum. Potentially the bearish reversal, bearish reversal into the bearish momentum. That's when you start looking at the flow to see how smart money is positioned. But yeah, it's looking very similar to the high of here to the high of here, rising wedge, pullback from supply to demand. Pullback from supply, maybe midline to about 110, maybe all the way down to 92. All right. That's how I would look at wise waves. Don't just look at exhaustion of bulls or absorption of bulls, and vice versa with the bearish side. Exhaustion of buyers or sellers, exhaustion of bears or absorption of bears, either or, before continuation or reversal. So that is a quick analysis of Weiss waves. You can trade out Trades About to Happen by David Weiss. He goes into Weiss waves as well. And
all right, so that's the book, Trades About to Happen. So if you really want to know, you probably should read the book, okay? He did make some presentations, David Weiss, but he's very boomer though. Like he trades commodities, okay, and currency. So if you look at if you try to go to YouTube and try to find his old presentations, because he's dead now. He's been dead for like about 10 years, almost. So yeah, it's like he basically started his career in currency trading, commodities trading. So he's ultra boomer. It's like the like the lexicon he uses, the vocabulary he uses, it's very dated. So you might have a hard time understanding what the hell he's talking about, because there's no volume. He calls it ticks, because back then you didn't get volume data. All you had was tick data. So you had to guess what the volume was, Nowadays it's even worse, right? Even though you have like volume data, you don't have the order book or the options data at hand, and you can't even understand. You can't even incorporate it with it easily. So yeah, nowadays it's way more complex. Way more complex. Okay, so I think you wanna just stick with volumes for the most part, and it's good enough. It serves its purpose. It's not perfect though, as you can see. You can look at this, and one person might look at it as like, "Oh man, it's bearish." Some other person might look at it, maybe it's bullish. So yeah. Anytime people buy a stock, are they really buying it because they think it should stay at that price though? No, of course not. So you cannot. There's no way to read people's minds, right? And the order book can be faked, because a lot of algorithms are designed to spoof orders at certain prices just to maintain liquidity, as we already said. So all you can do is like, why the heck did a certain price stay at this area with a lot of volume? Basically, all you could say is like, maybe they agreed that this is the correct price on average, and therefore this is where it's going to stay at. And the last time we had that Palantir big volume, it did pretty much stay at that near that area. So it tried to go up a little bit, it tried to go down a bit, but it did stay at that area. So probably that initial volume candle right there, was actually the place to be. So no, we basically are making a lot of assumptions because there's no way to tell what this volume really means, right? You have to open up this volume and every share that's traded that day, you have to go like, who was the buyer and who was the seller? There could be like people that bought 500 shares and another guy that sold 1 billion shares at the same time. So a bunch of idiots that sold 500 shares each up to 1 billion shares or something, right? And then it's just like, dude, so one rich guy sold 1 billion shares and you absorbed it by buying, each poor person bought 500. So do you trust the opinion of the rich guy or the poor guy? That's another question you might ask. Usually you would side with the rich person because you would think the rich guy has better information than a poor person on average, right? But is that even true a lot of the times? So, yeah, you can't make any qualifying remarks on that. This is all just based on a model, a theory from Wyckoff, right? That we continually use. I think it's an okay model, but it's not a perfect model. And that's why I said it's just like physics. We use basic ideas for physics, right? We still use Newtonian physics because for most humans, we don't travel near the speed of light. Why do we care? Right? So Newtonian physics works well for a lot of cases that you see in real life. It simplifies a lot of things. So, and when I talk about like electric circuitry, if I taught a class, I'm not going to talk about quantum dynamics or quantum mechanics or quantum field theory no, you don't need that. You could just dumb it down and say like, just imagine it like a flowing water, a river. That's good enough. I don't care about what each electron is doing. I just imagine it as a mass of electrons flowing through a canal. So it goes like from your battery, it goes to a wire. It's just like a river. The electrons just go around and goes into your light bulb, lights up your light bulb. It flows through, right? That's how you should imagine it. So I think the Wyckoff way is just like that. It's just a model of what's really going on. But I don't think that's exactly what's going on. We've already went through the details. It's definitely not, especially now with options and futures trading. No, I definitely don't believe you should think about it as a reality. I think it's just a good model to simplify your life to trade. You know what I mean? You just want to simplify your life and trade. You're not there to analyze every little minutia to decide, oh, should I buy it or should I sell it? I don't think it's necessary. I really don't. Sometimes the options market does matter, right? But we already know which days we have options expiration. So we know around what time we have to care about options. But for the rest of the time, I don't care about options. I'm not going to care, right? I'm not going to care about futures, the VIX, blah, blah, blah. I'm not really going to care too much about it. Because that's just like a waste of my brain capacity, right? Just to think about these things. And then you're just going to get stuck in analysis paralysis then. You're never going to make a move because you're always scared about like, what's the reality? You're never going to get the true reality of the picture. There's just too many things working in the markets. You just need to do something simple to make it work. So again, look at this candle right here. This one, right? Between 160 and 174, right? That was the last big major volume. So the guy was wrong, right? He thought like around here, we should start going down. But it didn't happen. We went up a bit more, 21% on earnings. But after that, after the earnings, in 2 weeks, we went right back down. So that tells me that this whole cluster here, these very important. Like people thought like, oh man, good earnings, we go up. But then the next 2 weeks, no, never mind. I'm not going to buy anything higher than 1 90 here. So let's say this is around 190, right? And then people were just buying down here at 140. So this whole area becomes your range, and we pretty much stuck to it. Only for a brief time did we go a little bit above it on this earnings, but again, we went oop, and then we went right back down. Here, so it's becoming easier and easier to make. Just moving down on low volume, that's going to be really bad. Yeah, I'm pretty sure that's going to be really bad. But we'll see. We'll see how that goes. Whatever. I just already drew too much on this chart now. All right. Hopefully. The tug of buyers and sellers keeping the price in place and canceling that forces out. Yeah, that's the model. Okay. That's the model you want to say? Yeah. Okay. Done. Okay, we finished the video. Very good. All right. So I'm gonna read some articles now. Let me just read some articles. How about that? We got to get through all these articles. There's just so many stupid little articles and Twitter things and whatever. So let me put up the stocks here. I got to update this banner. I got to add all the cybersecurity stocks. But go to the last stream. I talked a lot about the cybersecurity stocks. We have to add more to the list. And then the 2 titanium stocks added to the steel list and go from there. All right. Okay.
I still remember 3rd of December, me in your sweater. You said it looked better on me than it did you. Only if you knew how much I liked you.
All right. First one up. So this is from Bloomberg. AI sales start to justify data center spending boom. Report says revenue from artificial intelligence has reached a tipping point, showing that the hundreds of billions of dollars tech companies are spending on it may be economically sustainable, according to a report from research firm Exponential View. Global AI sales, excluding China, reached $25 billion in the first quarter of 2026. Okay. So I got some charts. I might. Let me see if I got them. All right, let me see. All right, let's see. So something about China, blah 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 blah. Okay, let's see. I got no, not this one. This one. This tweet here and this tweet there. Okay. What else? Do I have anything else? Nope. Already covered that one. Okay. So the share of tokens used for US models on Open Router has collapsed. From Bloomberg, users shift to open weight Chinese models like DeepSeek. The shares of token used for US models on Open Router has collapsed. So Google, OpenAI, and Anthropic is the yellow-orange bar. Black is other, and gray is China. Okay? So that's DeepSeek, Tencent, Xiaomi, and Minimax. What the hell is Minimax? I never heard of that one. Holy shit. So this is the between June of 2025 to June of 2026. So yeah, it looks like the Chinese are catching up here. And then we got this other tweet from Samantha. China's AI models are maximizing efficiencies while the US hyperscalers are driving up build-out costs that will further put it behind in pricing power. Token costs falling. Yes, it's important, but it's barely half the story. The chart you want to look at is the one JDI clients have been tracking for weeks. It tells you everything you need to know about the threat to US hyperscalers and how fast China is stealing market share. So these are Chinese models here, token usage. And if you go back, like we already talked about token usage way back when, you know, so I forgot, like, what was it? Nearly a month ago by now, probably a month ago, I played that stupid little NVIDIA video about tokens, right? So I was talking about it. So you can search the videos on the channel. I'm sure if you type in token, you'll find it. Token maxing. Yeah. Okay, so let's see. Global AI sales, including China, reached $25 billion in the first quarter of 2026, exceeding the industry's estimated $21 billion in depreciation costs tied to investments in data centers and chips for the second consecutive quarter. While the milestone suggests that AI companies are beginning to cover the cost of their capital spending, the margins are thin. Depreciation charges still consume more than 2/3 of revenue, leaving a small buffer to cover other costs such as power, labor, and financing. Okay. So AI revenue has overtaken capital expenditure depreciation. So that's a good thing, right? I guess it's a good thing. For now, the economics are holding. The report published Thursday states. Okay. All right. All right. So, yeah, it looks good, huh? All right. But the margin for error is narrow, it adds, with more financing risk shifting into capital markets through leases, debt, and equity, especially among the so-called neo-clouds. The findings speak to one of the central questions hanging over the AI boom, whether customer demand is large enough to justify the hundreds of billions of dollars being poured into chips and data centers. The biggest U.S. tech companies, including Meta Platforms, Alphabet, Microsoft, Amazon, plan to spend as much as $725 billion this year on capital expenditures, much of it on AI infrastructure in one of the history's largest corporate spending sprees. It just about clears the depreciation hurdle, and roughly speaking, it's improving over time. Azim Azar, founder of Exponential View and investor in dozens of startups, told Bloomberg News, at this stage of an investment in any kind of capital expenditure, you wouldn't expect to have dramatically jumped over that hurdle, because if you had, you were probably leaving something on the table. Much of the AI boom has been measured from the supply side through disclosures from public semiconductor companies like Nvidia Corp and hyperscalers like Alphabet. Demand has been harder to quantify because many of the most important AI labs, including OpenAI and Anthropic, remain private. Generative AI revenue, excluding China, reached $110 billion over the past 12 months, and is scaling 3 times faster than any previous information technology wave, including the internet, mobile applications, and the cloud, according to a report. The figures are based on a data set that Exponential View built, tracking AI spending across more than 1,000 companies. They use sources including company filings, executive statements, press reporting, and cloud provider disclosures, and then adjusted the figures to avoid double counting between layers of the AI supply chain. The analysis assumes a 6-year depreciation life for IT equipment, including graphics processing units or GPUs, the chips used to train and run advanced AI models. Some investors argue this is optimistic, given the rapid pace of chip innovation, which can render older hardware less valuable within a few years. If GPUs lose economic value faster than assumed, companies could face higher depreciation charges, asset write-downs, or earlier replacement costs. Michael Burry, the investor known for betting against the U.S. housing market before the 2008 financial crisis, has described understated depreciation is one of the most common frauds of the modern era. However, data in the report suggests older chip models are not collapsing in value. The rental price for an hour of access to NVIDIA's H100 chip remains almost 80% of its launch level. Even into its 4th year, it is completely in demand, Azar said, noting it's become more expensive over the last year as demand for AI compute outstripped supply of NVIDIA's new Blackwell chips. That chimes with comments from Matt Garman, the chief executive officer of Amazon Web Services, who said in February the company had not retired 6-year-old NVIDIA A100 servers due to continuing demand. The report also shows more users are moving towards open weight and Chinese AI models such as DeepSeek. Data from OpenRouter, a platform that gives developers access to multiple AI models, shows the share of tokens requested from Google, OpenAI, and Anthropic models fell to 33% in June 2006 from 72% a year earlier. So that was this image right here. Okay. Azar said that reflects power users moving towards cheaper and faster models for simpler tasks. You don't always need a Nobel laureate to extract a number from your receipt to put into an expense spreadsheet. That does not necessarily spell trouble for leading foundation model companies, he added, but it raises the bar for charging higher prices. They will need to compete with additional services, with more lock-in, and with all the things that allow you to charge a premium. All right, so that's where we stand. So, okay, I guess we're okay, huh? I guess we're bullish. Are we bullish? So even with China catching up and all this other stuff, we're still bullish? Okay, so here comes another article. I gotta get through all this articles. I got too many articles right here. I gotta get through all of them right here. Okay. Okay, so this is OpenAI leans toward waiting until next year for IPO. So I think this is one of the reasons the semiconductors were pretty weak last week. Okay, Korea just got, like, if Korea hears this stuff, it doesn't like it. All right, Japan hears this stuff, it doesn't like it. A lot of Japanese, Korean, and Taiwanese and Chinese stocks definitely need to hear that AI is still happening. All right. Of course, like, China's competing with OpenAI, so I don't know. Maybe this is a good thing for them. But people want to see the books. People want this company to be public so that they can nitpick at the realities, right? So if we looked at the other article, Anthropic and OpenAI are private. So look at here. Demand has been harder to quantify because many of the most important AI labs, including OpenAI and Anthropic, remain private. Okay, so I think people are really wanting this stuff to be public right now. All right, a lot more important than SpaceX IPO. OpenAI is leaning towards holding off its IPO until next year. 3 people involved in the company's deliberations said a turnabout that punctuates the uncertain future for fast-rising artificial intelligence giants. The maker of ChatGPT hired bankers and lawyers with an eye towards a public offering as soon as the 3rd or 4th quarter of this year, the people said. Sam Altman, the company's chief executive, pushed those advisors to find a way for the startup to be valued at $1 trillion, up from the company's last private valuation of $730 million, according to the people involved who did not want to be named. Okay, blah, blah, blah. But this cascade of recent developments has caused OpenAI's executives to shift away from their most aggressive aspirations. Top of mind is what happened to Elon Musk's SpaceX after its IPO this month. It was the largest ever, raising more than $85 billion and reaching a valuation of $1.77 trillion on its debut. But since then, SpaceX stock has been on a downward slide as shares slumped to 153 at the end of the trading day on Thursday after reaching a high of 202 last week. Global markets have also been choppy in recent weeks, with tech stocks dragging down indices as investors question whether AI companies will live up to their sky-high promises. So I don't know. That's just an opinion right there, right? Come on. How do you know that? Okay, that has caused OpenAI's advisors in conversations with the company over the past week to caution that it may not find much enthusiasm from retail investors for its own shares, 2 of the people involved said. OpenAI is tapping the brakes on its IPO plans could disappoint Wall Street and Silicon Valley. Public offerings from OpenAI and its rival Anthropic, which also said it was making plans for a Wall Street debut, could unleash a wave of generational wealth. OpenAI said this month that it had filed confidential paperwork with security regulators to kick off the process for going public, but it did not commit publicly to any time frame. So I don't know. This whole thing looks like rumors and supposition right now. Hearsay, people saying in some back door that they're not going to do it. It could be a piece that was designed to crash the markets last week. Honestly, I don't see anything here that's factual, right? It's just a bunch of rumors. Rumors. So very suspicious timing. Very suspicious timing. All right, so let's look at the next one here. Chinese hedge fund says super bubble is ready to burst. So the Chinese have weighed in on AI, and it says it's time to crack this bubble. The bubble is over. Maybe this was another reason the markets weren't doing so hot last week, huh? Chinese hedge funds warn the AI super bubble is ready to burst. Another rumor, fear-mongering type of article, huh? Let's see. Two of China's best-known hedge fund managers are warning that the artificial intelligence boom in global stock markets has become an unsustainable bubble. Yeah, no crap. Wellspring Asset, whose founder Yang Dong is well known in China for calling the top in 2007. Oh, another Michael Burry type. Said global AI stocks have become a super bubble and that the collapse point may not be far away. According to an investor letter seen by Bloomberg News, Shanghai Bangsha Investment Management Center said the trigger for the AI bubble to burst has already appeared, citing pressure on breakneck revenue growth at Anthropic PBC. Is that a international subsidiary of Anthropic? At least 4 other Chinese hedge funds expressed reluctance around AI in May, according to a monthly summary of fund views compiled by CtC Financial Company and seen by Bloomberg News. 4 funds in the summary were positive, while the remaining 7 didn't give a stance on AI. The investor letters offer an insight into how China's prominent hedge funds are viewing a technology that is shaking up markets around the world. AI-related stocks have boomed this year, with bellwethers such as SK Hynix and Micron Technology more than tripling in value. But the rally is suffering from violent pullbacks as investors and their counterparties become more cautious. Chinese tech stocks have soared past wider market this year. All right, so I guess this is the Chinese AI index. And in black, and then we have the gray, the total tech index, and the total mark. I think this is the CSI is probably the Shanghai exchange. I'm guessing. I don't remember. I don't. This is definitely not the Hong Kong one. That's probably the Shanghai. I don't know if the Shenzhen or the Shanghai. There's 2. They have 2 markets in China: the Shanghai one and the Shenzhen one. And then we have Hong Kong, which is not technically part of mainland China, so that's different. But in any case, this kind of looks like America, right? The tech stocks are dominated by the AI portion of it. Just like the NASDAQ we have here, is semiconductors are pretty much dominating everything. So Wellspring, which manages more than $1.4 billion of assets, wrote that many of China's AI infrastructure, many of China's AI infrastructure companies lack a long-term moat, run quite ordinarily business models, and require constant capital spending to sustain their growth. We truly did not anticipate that a mere boom driven by a wave of massive demand could be hyped up to such high valuations and market capitalizations, the firm told investors. Back in the 2015 bull market, there was a term, brainless buying, and right now we are probably in a similar state again. Wellspring wrote that some of the hottest shares in China's domestic stock market were very likely to crash more than 80%. Oh man, dude, Chinese tech stocks still haven't done that well. Like what? Oh come on, 80% from here, dude, Alibaba and like Tencent and JD, all those. Okay. Okay, that's not good. That's not good. Although it didn't pinpoint specific shares that were vulnerable to a wave of selling pressure. Banksia, which managed more than $294 million, pointed to warning signs outside of China's borders. The firm predicted that Anthropic's annualized return revenue runway rate, a closely watched metric for AI bulls, will fall short of market expectations. Large tech companies will recoil at the rising cost of tokens, while Anthropic's competitors may chip away at its popularity among computer programmers, the Chinese fund said in its investor letter. To be sure, there is a cost to avoiding AI. Wellspring Zhuan Fund and Banksia's low volatility macro fund have both posted small losses in the first few months of this year, although they remain well in profit over a longer period. China's CSI artificial intelligence index is up more than 35% this year, trouncing the roughly 5% rise of the main benchmark. That is still well behind the moves elsewhere. South Korea Kospi has jumped almost 100%, powered by a blistering rally in SK Hynix and Samsung Electronics. Baxia founder Li Bei remains resolute and offered the following advice to stock pickers. If investors want to throw this money into chasing AI, even if you get mad at me for saying this, I'd still strongly advise, please be very, very cautious. Banksia declined to comment. A representative for Wellspring didn't respond to a request for comment either, I guess. So you got some bullish article, one bullish article, and two bearish articles on AI. So what do you think? Are we just gonna pop this bitch? Very bearish market. Everything on sale right now. Oh yeah, China. Yeah, China's a shithole. I only trade that whole market, dude. Man, China is so bad. Maybe OpenAI saw what happened with SpaceX. Yeah, that's exactly what that article said. I don't know. I don't know though. Maybe that's an excuse. Maybe it's just rumors, just a fear monger, right? A lot of these articles are timed in a certain way to fear monger at certain points. We're at the end of this quarter. Only 2 more days, right? We'll see what happens next week, and we'll decide then. So hopefully we can just go back up a little bit, get my Intel at 200 so I can sell. But like I said, last show I talked about real estate investment trusts, biotechs, healthcare. Look at those guys. Look at those guys. All right. See ya, Trope. See ya, Kitchen Man Dan. I'll see you around. It's about 2 hours. We can finish off some other articles later, but that's good enough. Those are the articles I really want to talk about. And there's this website. Actually, I'll show you this website. You guys should check it out. It's called isAIprofitable.com. Some guy made this website for you guys to look at which companies are profitable in AI. Look at here. Is AI profitable yet? The answer is no. $1.4 trillion total industry spend. $613 billion total industry revenue. $350,000 spent since last page load. So I can just reset this. Okay. And then go like, oh my God, let's go. Oh, let's restart it. I'm burning money like crazy, man. I just burnt 100K right here. So you can look at Amazon, profitable. No, we are losing $291 billion. Alphabet, Google, no, $262 billion. Microsoft, no, $235 billion lost. Meta, nope, $227 billion lost. I think you get the idea, right? And then we go down the list with like all these other guys. Who's the only company that's actually making money on AI right now? Nvidia. So you sell the picks and shovels, make all the gold miners go out there and get the gold. So you have the check writers versus the check receivers. So Nvidia, Intel, AMD, you know, all these other companies, Qualcomm, Broadcom, Micron, SanDisk, these are the ones that are going up. Those red ones, those red companies you just saw up here, guess what? They're going down, right? They are going down. So that's it. That's all you gotta say. Right there. So that's why those stocks are going down for now. Software hasn't been doing well. So there you go. All right. Yes, it's almost an hour. I've got to go eat. Got to go eat again. I'll see ya. Peace.